Thank you. No, I'm not muted. Hello.
Hard to mute you. We always want your contributions.
Oh, thank you.
I'm not sure we met. I'm Henry Dakowitz.
It's for in the current year. Obviously, we issued a clean opinion during the current year. We had no difficulties during the audit as we asked for information from both Henry and Tom and their staff as we went through the process. Everything we asked for, we received. We also conducted our audit in accordance with federal and state single audit guidance, and we issued unqualified, unmodified opinions on those financial statements as well. The city itself had a good year. There's some, there was nothing out of the ordinary, I would say, other than in the previous year. When you look at comparative statements for the city of Norwalk, you're going to see in 2018, we had that big credit based on a change in OPEB assumptions. And there's a change in benefit terms, and that went right through the financial statements in 2018. So from a comparability standpoint, you looked at 3 years, you're probably more in line with 2017 from a comparative, if you compare years to where you were in 2018 because of the big hit, benefit hit that we took on that OPEB liability in 2018. From a intergovernmental revenue standpoint, things were consistent with the prior year. Fund balance, and I think we'll just run through the MD&A, which is pretty much all the information that we speak of, and then we can highlight the footnote. So that starts on page 4 of the financial statements, page 3.
Just before we go forward, you continue, Scott. Two quick questions. One, Henry, is this a public meeting? Or is this supposed to be a closed discussion?
I believe it's a closed discussion.
So, Larry, you have this streaming live on YouTube right now, according to the Zoom update here.
What I would say is generally this meeting has been open, and there's been like Nancy of Norwalk has been to this meeting in the past. I don't know that she was invited or anything, but I don't know that it's been a closed meeting in the past. That's just my input.
Oh, I don't have a strong opinion about it. I just didn't realize that it was.
Yeah, I don't recall in the past. I mean, yeah, other than Nancy, I don't think anyone else attended, but I just wanted to make it aware that, are we talking here streaming live on YouTube or not?
I stopped the stream. It is being recorded, and because I broadcast it, the public can attend, but we don't have any attendees.
Okay.
Was it noticed as a public meeting or not?
Yes.
Because it is kind of a bit of it's not I think this is still an ad hoc committee, which doesn't constitute a quorum of each of it's got representatives from the council and the Board of Estimate and the Board of Education, but it doesn't have a quorum of any of those bodies. And it's an ad hoc committee meeting, or it's an ad hoc meeting. But as Nate said, I think in the past the door has been open and people have been allowed to come in. But
just I could say based on my discussions and other many presentations I give to audit committees and Board of Finance, it's usually a public meeting, and as we go through the process. So what we're saying is basically all in the financial statements. There's nothing from a private matter at all as far as discussing the financial statements in an open forum.
My suggestion would be to post the recording onto YouTube after the meeting, as we have been doing with other committee meetings. The only ones we've been streaming live, to my knowledge, are the Common Council meetings and the Board of Ed meetings, but committee meetings have been recorded and posted online the next day.
Yep, that's fine.
Okay, Scott, when you were talking about page 3,
yep,
a hard time zeroing in on what page 3 you're talking about.
Okay, that starts the management discussion and analysis.
Oh, okay, all right.
Right after the opinion.
Yep.
Okay. So basically, these first 4 bullet points really talk about what's embedded in the financial statements and the financial statement highlights. You can see there's an increase in revenues over expenditures on the government-wide in the first bullet of 37.2 or 11.5% over the prior year. And just so you know, Nate, from the TRB standpoint, that's a net transaction. So revenues will equal expenditures. So it won't have an impact on the P&L in either the fund or the government-wide statements. The biggest, going down to the next bullet, it talks about our governmental funds and what we see there. The main governmental fund that we talk about, and that's discussed in the third bullet, is the general fund. The general fund reported a total fund balance of $74 million, an increase of 12.8 from the prior year, resulting in an unassigned fund balance of 18.3% of total revenues. So a strong fund balance there within the city of Norwalk. One of the key things, that we talk about with that fund balance rating is what the bond rating agencies are listing the city of Norwalk, and they continue to have a AAA rating from Moody's and S&P and Fitch in the current year.
Just a quick question to either Scott or Henry. Would it be possible to share the screen so that all attendees can see? Because I don't know if we all are looking at the same document.
I cannot do that, but what I can do is just kind of, instead of going through each page, I can just provide a narrative of it and the expenditure of it. So I'm not referring to page number.
I can try to share it if you'd like here. It seems to be letting me share, and I've got it up. So.
Okay.
Can you see that?
Yep, sure can. Thanks, Tom.
Yep.
So these are the financial statement highlights. We talked a little bit as you go down to the second and third bullet about the general fund, and the general fund is the operating fund of the city. And you can see the unassigned fund balance there in the last sentence of the third bullet is 18.3% of total revenues, which was an increase of 12.8 million from the prior year. I spoke about the bond rating that the city maintains, which is a AAA. One of the new disclosures I think that we have in this year, and speak to Henry about as we talk about financial statement highlights, was a gross authorization of bond issues that were approved by the Common Council of about $390 million. And Henry knows the detail of that, but that was an authorization that was made and really was a financial statement highlight because there's a lot of activity there. Then we get into your 4 defined benefit plans, which actually is a big part of the city's budget. And they had an investment gain of $21.6 million in the current year. So it was a good year from a financial statement standpoint, especially within the pension plans. And the funded ratio remains at 80%. One of the key figures we discuss is what is a funded ratio of a pension plan, an average pension plan. And for our actuaries, it's between 70 and 75%. So the city of Norwalk, as I've said every year, is disciplined in making that annual required contribution each year, and maintains a strong balance within that those pension plans. As we talked about fund balance and we talked about the level of funding within the pension plans, those are really a couple key attributes that lead to that AAA rating that you have. So those couple things together, and good management, tax collections, and things of that nature, have you do that. The next bullet talks about your OPEB liability. OPEB liability at the end of the year. So what OPEB is your future health benefits that you're going to pay to retired employees and employees who will retire. And that was at $168 million at the end of 2019. Now, the rest of the statements we can go through, we'll talk about capital assets and debt service, but those are the key benchmarks as you go to the rating agencies and what they talk about. And obviously, strong pension plans, strong fund balance in the general fund, and the ability to collect taxes, but also the ability to raise taxes if you had to, and to collect. So those are the key as management discusses what was important to them based on a GASB information, those were the key bullets there. Tom, I think I'm going to go to page 5 of that same statement and to show everybody a snapshot of their government-wide statements and where the assets and liabilities were there. So these statements themselves, they're on the full accrual basis of accounting. What the full accrual basis of accounting means is that you're measuring all long-term liabilities and all long-term assets. And this was your balance sheet at the end of the year. You can see, what a number that probably sticks out to you is probably that deficit position of $118 million of unrestricted net position. What that's made up of really is back 2 years ago, the city had to bring on this net OPEB liability, and a few years before that, the net pension liability onto the balance sheet of the books and on your financial statement. So that's what's driving that. The city's made good strides in funding those OPEB liabilities and continue to try to have that amount decrease. Tom, I'm going to go to page 7 now, and so you can see, I think, we talked a little bit about 2018 and 2019, or 2018, if you go to the bottom of the page, you're going to see a big increase in that position from 2018 of 127, almost $128 million. And that was driven again by a change in benefits that directly hits the financial statements instead of being amortized over 5 years based on an OPEB change. So as you compare your numbers from 1 year to the next, you're going to see within the expenses, the comparison, it's $84 million difference. Well, what happens with OPEB in 2018 is we allocate that through the various departments, and which lowered expenditures, which is based on GAAP. But this year in 2019, they're very comparable to what they were in the prior year, with the one exception of that credit that was taken with the OPEB liability associated with teachers' retirement. And that was in the current year, how that it decreased the Board of Education expenditures on the full accrual basis of accounting. I just want to be clear, that's not a budgetary entry. That's more of an entry that's given to us by the state of Connecticut. They have one big plan, and that would be allocated to all 169 towns throughout the state. I'm going to really jump forward a little bit here to get to the fund statements. And Tom, but we're going to go to, I believe, let me get there, page 15 of the financial statements. Yep, that looks like, yep, we got it. Okay, so here's your general fund, and we talked about where the fund balance stands and the measurement that's used for that. You can see at the end of the year, total fund balance of the general fund, which is the bottom third of that page, is $74 million. And the bulk of that, 69 million of it, is unassigned. Basically, there's no tentative plans to use that fund balance, and that was about 18% of your total revenues for the year. The other major fund is the Capital Project Fund. The Capital Project Fund is there for projects that have been authorized. And the timing there, that fund could go up and down with fund balance depending on the receipt of bond proceeds. But other than that, your non-major governmental funds are very consistent with the prior year, and not a whole lot of change from there. From a general fund standpoint, if you look at the general fund itself, going to page 16, Tom, the revenues and expenditures were consistent with prior year. And we note there the $12.8 million increase in fund balance from $61 million in 2018 compared to $74 million in 2019. So again, pretty consistent. You can see from a capital outlay, which is in the second column in the second third of the page, you had $39 million worth of capital outlay expenditures for 2019, and we issued debt of about $26 million to fund those type of projects. As noted earlier, there's some large projects that have been approved, and this fund will have increased activity as you go over the next few years with bond activity, and you'll be short-term borrowing and some intergovernmental grants coming in. So I would say from a capital project standpoint in 2019, it probably was a slower year than usual, but obviously that will pick up based on your bond authorizations from year to year.
So Scott, question, I'm not sure, maybe this is a question for Angela, but do you know what the planned use of fund balance was in 18-19? I believe the budget did incorporate some planned use of fund balance.
Yeah.
Obviously, fund balance grew by 12.8, so there was no actual use of fund balance, but I'm just wondering what the planned use of fund balance was that year.
Yeah, give me 1 second. I can just look at our budget actual statement as we get back there.
My understanding, Tom, is that the planned use for fiscal year 2019 was $6 million, but we ended up with a $6 million surplus. And that's why we had a $12 million surplus for the year. And that got added to the fund balance. And then in fiscal year 20, we increased that with an intent to use $8 million drawdown of the fund balance.
Okay, but if you had a plan, planned use of 6 million, which I don't remember now. I'm getting my years confused, but then wouldn't, if you had an actual increase of 12 million and you had planned to draw down a 6 million, then you would actually be $18 million better than planned, correct?
I think the plan,
I think the 2020 is 6 million. The 19, I think, was 2.35.
yeah,
2.35. Okay.
Yeah, 2.35. And from a, Tom, just kind of sum that up a little bit. From an expenditure standpoint, the city had budgeted $356 million worth of expenditures and had 348. So they had about $8.8 million favorable variance from an expenditure standpoint. And then, doing the math, the same type of, from a revenue standpoint, they had a very positive year too, where they budgeted 351 million and 361. So they had about a $10 million favorable increase in the general fund balance. So, property taxes came in about $6 million better than anticipated. License and permits came in about $2.8 million better than anticipated. And what really was a big driver from a revenue standpoint is was your earnings on investments. The city had budgeted $1 million and $3.7 million came in. That gave you another favorable variance of 2.7. Also, there was some return of appropriations where it's spent fully in the Board of Education, as you know. And that was a big one. In some other areas, protection, $1 million, debt service based on some refundings was a $1.7 million savings. So we really hit, from a revenue standpoint and a expenditure standpoint, we definitely came in better than anticipated from a budgetary standpoint.
Right. Okay.
Okay.
Thanks.
Yep. From, I think I'm going to turn to the fiduciary funds, Tom, and that's on page 21 of the statements. As you key the fiduciary funds, they're trust funds, at the end of the year, had about $538 million of total assets. And you can see the mixture there of what the city's invested in. And as investments are level 1, 2, and 3, and then leveled at a net asset value, which would be your hedge and alternative investments. So, had a strong rate of return in 2018, and you increased that fund balance. If you turn to the next page, Tom, for me, that'd be great. From $20 million from $516 million to $536 million at the end of the year. Again, another strong year. as far as your rate of return on those investments go. And you have your portfolio follows your policy as far as the investment mix and how that's accounted for. Those are the big numbers in the statements that I wanted to talk about before I just jump through some of the notes. So I'd open those questions up now as far as any questions that you may have as far as you look at these financial statements.
Yeah, I don't have any. I floated a couple out there we got through already, so.
Okay. So the statements themselves, this was a pretty quiet year for the first time in several years as far as new accounting pronouncements. There were really no new accounting pronouncements this year that impacted the financial statements. I think the one thing we're finding, especially on the government-wide statements, and we can really look at the last couple of years, is the big swings that these actuarial adjustments have in the financial statements on these big numbers, both at the state level and at the city level. Again, I think the change in benefit from the TRB, that will not happen again. And the change in benefit that you had in OPEB in 2018 probably won't happen again either. So anyway, those are the, there's some big estimates in the financial statements, I guess is what I'm trying to articulate to you. The budget to actual, that's still operating as it did, for the last 15 years that I was here. So no changes there. But the big changes in pension and OPEB are the ones that kind of, in my view, really make it very hard to have comparable numbers at a government-wide level from year to year. But going to note one, which note one is really the city's accounting policies. There's really no changes in the accounting policies in the current year. Everything was very consistent with the previous year. What note two does is note two walks us through, and Tom, I won't just give page numbers. I'll jump to when I get to the pension plans, just then to measure that.
Oh, that's still note one. Sorry.
Note one's a long one. Note two really is a reconciliation. I talked about how the governmental funds and the government-wide funds are measured until they're two different bases of accounting. And note two just explains the differences between your long-term and your short-term liabilities and assets and the changes in those. Cash and cash equivalents. So at the end of the year, Tom, maybe I'll just go to this page. It's on page 35. So at the end of June 30th, 2019, the city had almost $740 million worth of cash and investments that they manage. So if you think about that, that's a large sum of money. State statutes kind of dictate where you can invest your governmental fund cash, so your capital project fund, your general fund cash, really very limited in what you can invest in there, very low risk type investments, where your pension plans and your OPEB trust fund really have the prudent man rule, where you could basically go into equities, alternative investments, mutual funds, U.S. government securities. So that is managed, on a quarterly basis as far as what your investment policies are. And, nothing unusual there. If you look at many of the AAA communities out there, each of them or all of them are invested in these alternative type investments. It's just common practice. I believe, off the top of my head, I think you had about 13 or 14 fund-of-fund investments and alternative investments from each year. And so our audit process through those alternative investments is a little bit more unique. It's just not something you can go to the Wall Street Journal and get a quoted market price for. Basically, all these hedge funds and fund-of-funds go through an audit process where typically it's a national firm that audits these funds, and then we roll those forward to a net asset value as of June 30th, 2019. So very intensive audit work goes into those funds, because it's not just something you can get a piece of paper for as of June 30th and say, here's the value of those funds. So there are some estimates embedded in there as we go through that. Just that, where your big estimates are in those type of funds. And when you go into these alternative investment funds, you do commit some continual contributions to that fund, to those type of funds. And at the end of the year, there was still $8 million committed in addition to what you have invested into those alternative investments as of June 30, 2019. Again, all in their investment policy, consistent with state statutes. Just, and I would say, if some people would ask me sometimes, what do you think, right, wrong, or indifferent? Really not the auditor's view to say that, but they're managed, they're reported, they're all getting probably Big 4 or Big 6 national accounting firms giving them an opinion on those funds. So you're doing everything right that way as far as looking at what type of funds you're investing in the type of feedback that we get. So we're not having trouble with any of those funds, and all those funds receive unmodified opinions from their external auditors. So each of those funds are audited. So I'd go to just to your long-term debt, which is note 6, Tom, on page 41. So these are some of your long-term liabilities there. You can see from a debt standpoint, and that's the first section of that schedule, there's about $249 million worth of outstanding bonded debt. And then as you drop down to the next section of that schedule, you can see there's another $207 million with the other long-term liabilities that are not bonded. The big ones being the net pension liability, compensated absences, net pension liabilities, and your net OPEB liabilities, making up about $174 million of those outstanding payables. The city does retain risks for workers' comp and health insurance, which is about $13 million. So at the end of June 30, 2019, the city had $456 million worth of long-term debt, that long-term obligations that are out there. And you can see, from the net pension liability grew from $93 million to $106 million, and the OPEB liability decreased from $78 million down to $68 million during the year. So again, some big estimates there. And with the net pension liability, what drives those are, well, a couple of things I wanted to talk about with pension liabilities for next year's audit is the Society of Actuaries have come out with new mortality tables, Pub 2010. And basically those new mortality tables are designed for municipal type governments. They break it out within public safety, general government, Board of Education type employees, although that's not the big impact here in the state of Connecticut. So there's different departments as they go through that. And those are coming from the actuarial studies. And those are pretty much mandated to be used unless you have an experienced study within the city. Just so something that you may see swings in there. What I understand with Pub 2010 is that you can see increases anywhere between 6 to 7%, almost up to 12% on the liability when cities have implemented those in the 2019 year. So just something to look out for as you look at those numbers next year.
So Scott, why would, it seems a little strange to me that your net pension liability would be going up over the course of the year while the OPEB liability, the net OPEB liability is going down. I would think they would both go in the same direction based on what's happening in the market and so forth.
Yeah, a couple things. Yep, I think a couple things would be, you had probably a couple change in assumptions with that may differ between each plan, right? You could have healthcare trend rates that trended down, which would lower the OPEB liability. And in the pension plan, the actuaries could answer that. I'm just trying to see if you notch down your interest rate in 2019, which would drive
the pension plan discount rate.
Yeah.
Has been going down 0.1% per year.
Yep.
In coordination, shooting for something in the mid 6s. whereas the OPEB pension, the OPEB discount rate is already at 6.5%. So that's going to affect the changes in the liabilities.
Yeah, so that's why I think we drive that. And so as that goes down, the liability does go up. So I wanted to get to Nate's question. So Nate, if you turn to page 60, and we're going to talk a little bit about the TRB plan and just kind of help you get to your reconciliation. So for the TRB plan, you can see probably in the bottom third of the page, right before it says pension plan fiduciary net position, the TRB plan had $33 million worth of pension expense and revenue for the current year. Okay, but that 33 million was offset by the OPEB for TRB, and I'm going to get there 1 second. That was offset going the other way, Nate, netting out with a $19 million OPEB expense revenue, netting out to a different number in the current year. Okay, so we net those two. And then if you go to, we have reconciliation. There.
Scott, what page are you on? Are we on the same page?
I was on page, excuse me, I was on page for the OPEB. We go from 60 to page, I think it was 75. Excuse me.
60, I think it's 68.
Yeah.
Top of page 68.
Yeah, 68, exactly, yeah. 68. And so.
Okay, yeah, I see it. Yeah,
Yeah,
I see that counter.
Yeah, so then we had that bracketed, and so that's the change in the current year. And definitely, I don't think you'll see that again. I mean, and we had to go back, actually, just a little back on that. We, as you know, within the Governmental Accounting Committee for the CSCPA, you know, pushed back on that a little bit. Why did that happen? And they explained why. But it was very unusual as we looked at it in the current year. Yeah, so if you go to page, I always get nervous when I do this, but if you go to page 89 of the CAFR report, you could see that nets out a net there. There's going to be a reconciling item on page 89 of 13,615, which should be the net, that 19 and the 33 that you saw from both plans. So they took the 33 and that was offset by the 19 that got us to the 13 that ran through the financial statements in the current year.
Yeah, and then that 1.6 million, I guess, is another on behalf payment. So those,
Yeah,
to the
those
50.
are WIC payments, yeah, that comes through the Department of Health.
Right.
So those are the couple things so that's unusual. That was very unusual and had a big swing in your government-wide statements, absolutely, in the current year. So from an audit standpoint on the CAFR, you know, everybody puts a lot of time and effort into it from the city side and the Board of Ed side. And Henry came in and with Chitsime and Tom and his staff, the audit went really well. Everything we asked for, we get. I think we had the crossover refunding is now done. That finished up in August of 2018. So that was a unique transaction that was out there the last few years. That has finished up. So as you go forward, I would say a couple things to look for in this CAFR next year. And, you know, it's really the actuaries with the Pub 2010. I'm asking them about that and the impact that they will have. And you know, with the bond authorizations, you're going to have some more activity in the capital project funds over the next several years, which will increase capital additions, and which increases just additional financial statement prep work and reporting work from both the city side and the Board of Ed side as they comply with state statutes and the bond covenants and things of that nature. So we didn't encounter any difficulties as we went through the audit. Everybody was a pleasure to work with. And again, I don't think there was any surprises there as we went through it. We issued the report on time. The city had about $14 million in federal awards that they spent in the current year. And there were no material weaknesses or significant deficiencies that came up during the audit, meaning that trial balances that were presented to us were materially correct. Very few audit adjustments had to be made during the year.
Scott, are you on this state and federal single audit? I'm sorry,
I'm sorry. I was
checking an email and then I realized you were talking about something else. Why don't
you want to pull that up?
See if I can pull that up. I thought I had it, but let me see.
Yeah, so I'll just go to page 7 of that, page 5, Tom, of that report.
Okay, where am I? I'm having some trouble finding it. I don't know why, but let's see.
Okay. Oh, I mean,
I got it. It should be here.
Tom, you may have to share your screen again.
Yeah, that's what I'm trying to.
I mean, I was just going to talk about 2 numbers, so I don't think it's bringing up 2 more.
Here we are. Okay.
Yep. So go to page 5.
Okay, that's page 5, I think.
Yeah, it is. It's page 5 should show about $14,222,000 in federal expenditures. Yeah, but you got it there, Tom. Then there's the footnotes to the expenditures. And I'm just going to turn to what we have for state monies. And so from a state side, the city received about $36 million, Tom. That's on page 16.
Okay, this must be.
So about $50 million in intergovernmental revenue were received during the year. Again, we have to audit the major programs within those funds. We had no findings there. Everybody was in compliance. So again, a nice job in monitoring those programs. They're getting much more difficult because the federal government keeps upping some of the requirements to receive these grants and to comply with some of their new rules and regulations. We obviously implement those and audit through those rules and procedures with no findings of any kind. So again, a good job on the federal and state level also. So it was a clean audit, clean opinions on all 3 components of the financial statements. And that was really my presentation as far as the CAFR and the compliance report goes.
All right, thanks, Scott.
You're welcome.
You want to go through your audit letter, management letter stuff?
1 second. I think I touched my required communications. I think I'm good with that. And I don't think I issued a management letter. I don't believe. I had the compliance report. I went through my required communications as far as we conducted our audit and government auditing standards and with GAAP, had no findings and issued our unmodified opinion. and no difficulties encountered with other auditors, or no consultations were performed. So from that standpoint, I think I'm pretty good with that, Nate, as far as my required communications to you and your audit committee.
Yeah, you had some observations, I guess.
Okay. I don't know if I have those. Let me see. 2018. I don't have the management letter in front of me, Nate, so I apologize for that. I don't know.
I guess you had some, you had something about review of PC cards, employee reimbursements using PC.
Oh, right. I think we did.
Right.
So what we did from our unpredictability test this year, we just took a look at those, you know, PC cards. And I think there was 1 or 2 instances where there might have been a little bit of documentation missing, nothing material. So we just asked you to review that policy and procedure to make sure that employees comply with it. I think when we see that, and that's a common one, it's about education and training again, as far as making sure that people are complying with that. So it was nothing material or significant, or we reported it as such. But again, just taking a little bit of a look at that and making sure that, you know, everybody's complying with what the city's requirements are.
Then one other thing, I guess it says was in the WPCA, there was $331,000 of unbilled legal fees. Is that that? Where were those? What were those legal fees?
I'd have to see that letter. I'm sorry, that does not. Let me see. And that was a past adjustment, probably.
I guess so. Yeah, it's in the representation. It's in the representation letter.
Yeah. So we probably went through. I think when we went through, there was some timing as far as the recording of a liability was immaterial. It wasn't recorded, so it's a past adjustment. The details of it, I don't know, Nate, but it was something that we put up when we looked at our attorney letters and as they came up. I can find that detail out for you and get back to you.
Okay, actually, I guess it says it's under the Water Pollution Control Authority, which.
Okay. I have to get back to you on that.
Okay. All right. So you're pretty much set with what you got?
Yeah, I am. I'm good. Yes. Again, thank you for everybody for their help. And again, thanks to City. I know we've been out there a long time. Always enjoyed our stay out there and working with the various folks and the audit committee. I think the practice of the audit committee is a really, really good one. So I definitely encourage you to keep it up. My suggestion would be, as you have new auditors come in, maybe meet with them from a planning standpoint and talk about their plan and some of their expectations. I think it would be great to talk to them before they start and then after on a conclusion. I think that would be a best practice. I know you're going with a good firm and you know, we'll certainly help them in any way that we can as far as they go through the audit.
Did you say you've been doing this for 15 years, Norwalk?
I'm doing it a long time. I think maybe even more, maybe.
Wow.
Yeah. Yeah.
That must mean I've been on this committee for 15 years.
It might, yeah, you've not
a long time.
Exactly. Again, never any problems. Everybody was always good to work with. Good accounting records. Tom, Henry, Chitsime, Fred, always utmost professional. We always appreciated that. And to my staff, which is not always the case, and how they handle my staff, I was always appreciative of that.
Scott, do you want to just mention a couple of words about why you decided not to go forward?
Yeah, I mean, we're taking a little bit of a look at, as a whole, as far as a public sector practice. We're getting busier and busier, and public sector accounting is getting more complex. And so, as we looked at it as a firm, you know, dedicating resources to public sector, a little maybe not be our focus right now. I'm doing a lot of work nationally now, so my focus is as far as a number of clients I can handle. But it was nothing to do with any problems with the city of Norwalk. It's probably a direction of the firm as a whole and what we're looking at. So yeah, just you know, sometimes the firm takes a little bit different direction, and you have to go with that. And quite honestly, that's kind of what we had talked about as a firm. And yeah, it's not that to say that we're not going to ramp it back up in a year or so. We're kind of going to catch our breath, retrain, and make sure that we're dotting our I's and crossing our T's.
Okay, thank you.
It's been good working with you, Scott, over all these years.
Yeah.
And I give you credit. You're pretty quick on your feet to not have this meeting on your calendar. You jumped right in like you were all ready for it, you know?
Tom, me, hey, we've been doing this too long.
Yeah, been at it. We've been at it a long time. It's been good working with you over these many years, Scott. So I wish you the best, and hopefully our paths will cross again somewhere along the way. So
definitely will. Definitely, I'm not going anywhere. Just slowing down in my old age. That's it.
As we all
Hey guys,
are.
this is Alicia. Just one quick housekeeping measure. I got disconnected before, and when I signed back in, it looks like it signed me in as the mayor. So just so everybody knows, the mayor was not on here. But it was me, even though it says Harry Rilling on there.
One thing I would raise is normally we would have the city employees leave and the volunteer folks and board members talk to the auditor, but I don't know that we can even accomplish that with, if the hosts leave, we may not be able to do it. And I don't know that we need to do it, but if anybody's feeling we need to do it, maybe we can find a way to pull that off.
We could drop off. Other meetings have had, like council meetings just last night, someone recuses themselves, they exit the meeting, and then they're called back to return if necessary. So if you
I could just tell you that we had no problems with management, no problems with any information that was given to us. And the communication would just be, the audit went well, and no areas of misappropriation of assets, nothing like that that came up that would warrant a private conversation with the audit committee.
All right, anybody, Greg, Ed, Colin, you have any questions you might want to ask the auditor off without city employees here?
I have no questions at this time.
I'm good.
Ed, you're muted.
Sorry. Yeah, no, I have no questions to ask privately at all. Seems pretty straightforward.
Okay. Colin, you good?
I'm good. Thank you.
All right. I think maybe we're all set then.
Thanks,
All right.
everyone.
Thank you.
Scott. Best wishes and
All
thanks.
right, thanks, Scott.
Thanks a lot.
Okay.
Okay.